Hello, welcome to FountainFX on Wednesday the 4th of December 2013. We're still looking at the Euro Aussie. The reason being is that we can gain a good lesson from this if we look at order flow and we look at what's actually happening in terms of price movement and price action. Very much buzzwords that everyone seems to use, but if we look at it from a practical point of view, originally we were looking at a sell around about this 150 area, because on the big picture, if I switch over to the daily, we'll see price was in this area of supply where previously it had touched it and fallen, then touched it again and fallen even further. It had gone in a sideways channel before it had broken out of that channel and then pushed back up into this area of supply. So it was an ideal area to sell, and we were looking for confirmation that downward move would continue down, especially down to this 145 area down here, the previous area of resistance. And what's actually happened is price hasn't actually done that. It's just really formed a pullback in this uptrend that price is making. Now on the daily, if we look down at the MACD, we can actually see on the histogram that the actual momentum upwards is actually declining on the histogram, but it's still a strong upward momentum. That's what we need to be aware of. It's still pushing up, even though the actual the amount of force behind the upward move is actually declining. It's still an upward move. So what can we do? If we go back down to the 1 hour chart, we can see that price fell and it broke through this area of support. So it showed in that at that point it was starting to turn into a downtrend. Now on that day, we turned around on Monday morning, we said, look, if price pulls back to this area of previous support, we could take a short from there, and we did. We took a short and it came down from the 1.4880 level down to the 148. But that was basically as far as it went. It then turned and rallied all the way back up, didn't even bounce off this area of resistance and just pushed straight through, sort of bounced along it and then pushed higher. So it created, went from that low to create a higher low, and therefore that was indication, along with the change in momentum on the MACD, to show that price had changed from being in a downtrend to being an uptrend. So this area of supply on the big picture has not been honoured. It hasn't been supported, and the reason being is that the previous area of supply was from several months ago, and obviously the sellers have taken their sell orders off, etc., and it's now like, well, let's buy, let's do something different. So the institutional traders are constantly loading orders and taking orders off. Just because price sold off rapidly previously doesn't guarantee absolutely that it will do it again when it comes back into that area. So we do have to watch what the market's doing. We do have to go from the bigger time frame down to the smaller time frame to get a clearer picture of what's happening. So with this, we then had a downtrend which was then broken and it turned into an uptrend. And yesterday, as price pushed higher from there, I plotted this line of support on here and said, look, we could potentially use this as an area to buy, with a view for price to come back all the way up to the 150, 152 area. So we would be buying at the 148.80 and selling at the 150.20. And look what's actually happened. Overnight, price has just, during yesterday, price just came down to it in the European session. They sold off, came down to this level, and it just bounced along. But it's just created a very strong area of support, and from there price has just rallied all the way up from the one, if I look at the low, was the 148.60, 70 area, and the high has gone all the way up to the 150.22. So that was, in those 2 hour move overnight during the Japanese Asian session, price has moved over 120 pips straight up, in fact 140 pips. So that would have been a great trade, 140 point trade while you were sleeping. And as we can see, this morning price has pulled back, created an area of order flow consolidation where price has really not moved that much, and it's now broken through this area of supply. So this area of supply is invalid, it's not being honoured, price is not pushing down as we expect. So this is a good example of what to do when the market doesn't do what you expect it to do. How do you react to it? That's the key thing. That's the difference between making profit and making loss. When I used to start, I used to take this view that I've got an area of supply or I've got an area of demand, and the market will respond to that and it will pull back and I will make profit. And invariably what happened is that when it didn't, I didn't know what to do, how to react to it, because I was adamant it was still going to go in my favour. And that's how my accounts when I first started would get depleted very rapidly, and I would be losing, not because I wasn't really looking at the entries correctly, but when the market didn't perform as my trade plan expected, I didn't have an alternative. I didn't know what to do when it went against it, and so therefore often I would leave my stops in place and just let myself get stopped out, which meant I had a small loss, rather than say, well, actually I can see clearly it's not doing what I expect it to do, so I'll take my trade off now, either for a small profit or a smaller loss, and look at exactly what the market is doing instead of what I thought it was going to do. So if you can understand that kind of things, that will help you to learn how to trade quicker, more effectively, and how to respond to market conditions rather than the conditions that you think there should be. So this is really the key area of trading. It's about being able to react, be able to plan and predict, but then also react to when market conditions should change. And that's a good example. We had a nice trade off there, 140 points. So happy trading from FountainFX, and we'll catch you tomorrow.